Okay, everybody, it's me, Gregory Mannarino. It is Tuesday, July 26, 2022. People, how about this? All the freaking crap that we're hearing. Oh, maybe recession, maybe not. Oh, Janet Yellen doesn't see one coming. Well, guess what? We just got a tremendous clue, if you want to call it that we are in recession right now. Can I get a duh? Maybe a duh, please? Walmart is warning that the consumer is not just weak, but very weak. And their earnings missed the mark. Walmart, like a bellwether here, is slated to crater at the opening bell. Well, let's see how that plays out. But look, the lies, the distractions, the deceptions are just going to continue to get louder and louder in this twisted, upside down freak show of an environment here. So with that, again, let's just look at the economic news that we continue to get. It doesn't stop. It's all bad and getting progressively worse. I mean, the Federal Reserve has indicators that they look at to tell them what the economy is going to be doing most likely moving forward. Every single one of the Federal Reserve's own indicators, forward-looking indicators, are pointing lower. You can't make this stuff up. But again, they're going to try to tell you what they always do. What you're seeing and what they're even telling you isn't real. Like I tell you every day, it's just so sick. But that's okay. Look, it lets you and I know what we should be doing in this environment. What do we know? It always comes down to what we know. Do you believe, here's the question right off the bat, do you believe that global debt is going to miraculously start to shrink? Or do you believe that global debt is going to continually and exponentially grow? How about that one? Yeah, it's not going to stop. Now, just with that in mind, let's look over at the market. Stock futures are lower across the board. Nothing major, but lower nonetheless here. A lot of this is Walmart, and they're warning about how the consumer is not just weak, but very weak. People are getting strangled to death. Meanwhile, what are they doing? They continue to borrow beyond their eyeballs. Loan defaults are skyrocketing. Home foreclosures off the Richter scale. Okay, so this is what we're seeing. But again, what are they doing? They're trying to tell you that it's not real. Well, it is very, very real. So, like I said, with the stock market here, looks like a lower open. A lot of this is Walmart here. It's going to drop about 9% at the opening bell. And I don't know who's buying that dip. Ain't going to be me. I can promise you right now. Anyway, with that said, let's look over at the 10-year yield. 10-year yield is in free fall yet again, 2.74. Me, I said this a few days ago. I believe that despite the fact that the Fed is raising rates, they're raising rates here. You know, the federal funds rate incrementally, and it's really going to tame inflation. You know it is because they're telling you. And if the Fed is saying, hey, if we're going to do this, and it's really going to help inflation because we really want to do something about it, you know the polar opposite is actually true here. So what we're seeing here is an incredible thing. You got the 10-year yield in free fall, and in my opinion, it's going to drop a lot more. I wouldn't be shocked or surprised at all to see the 10-year yield fall to 2.5 in the short run here. And what's that going to do? That's going to foster an environment of risk, people. Regardless of what comes down the pike here, what's going to happen later on today? We're going to hear from two pretty big tech companies, Microsoft and Alphabet here, and earnings don't matter. It doesn't matter anymore. When you have central banks doing what they're doing, buying it all, and this is no secret to you because they've been buying it all since like forever now, you know, it pushes cash into places where it should not be going, creating distortions in the markets and inflating bubbles. That's all it does. And you see, look, I've covered this a million times, but I'm going to cover it again here. When you have the debt market being rigged like it has been since 2008. Nothing is real. In other words, there's not a real price discovery mechanism behind a single asset. Being that you and I clearly understand that every single asset derives value out of what's happening in the debt market, well, that tells us that other assets, all of them, are derivatives, not just the stock market, okay, of what's happening in the debt market. That's how big the debt market is. It eclipses the stock market by multiple exponents, okay? And you have to also consider that the currency is also part of it too. Currency, these are not units of wealth. These are units of debt. It's all part of the same thing. And no one even knows how big it is. I mean, the debt market, if you look at the debt market in aggregate or in total here, including derivatives, it's no one knows. No one can calculate it because a lot of this stuff here, this is just derivatives. And derivatives have layers behind them, layers and layers and layers of derivatives. So the debt market, if you would include all that, is in the multiple quadrillions. And it's a crazy situation to think about, but that's the case here. And as I've said to you a million times, and you know this, the financial system, it's not real. It's based on things that are not on the elemental chart. You understand? So realizing that should at least give you even just a clue as to how twisted the environment actually is. Let's go back to the markets just real quick. So on top of stock futures being lower this morning after Walmart's warning on the consumer, the 10-year yield falling, you have a stronger dollar this morning. You got gold relatively flat, silver catching a bit. Now Bitcoin has fallen to where I wanted to see it go. We're just about at 21,000. Now, I've been telling all of you for weeks, that I want to see a Bitcoin fall to around 21,000, and I want to see it maintain this for a while here, in like several weeks. I don't want to see it drop, to 18, 17, 15 or whatever. I want to see it hold where it is. If Bitcoin holds where it is, let's say in 3 weeks, we'll address that. I'm going to tell you right here and now, I'm going to start putting some cash to work there in Bitcoin. I've already put several $100,000 to work, and I'm going to be putting a lot more to work in the market. So I'm back in here big time. And I've been telling people this as well here. So that's really the story, people, this morning. But just pay attention, if you even, do this, to what's coming out of the mouths of the mainstream financial channels here. They're going to try to twist your mind yet again because they're all reading a script. They're trying to tell you that what you're seeing is not real. And they're trying to tell you that what they're saying is not real too. It's an incredible phenomenon. They'll tell you one thing one day, and then 2 days later, oh no, that's not right. This is the truth now. And then a few days after that, what they told you the second time, oh, that's not right either. That's not the truth. But look, you don't need to be a rocket scientist to figure this stuff out here. Just to sum up what's going on, we have a global economy cratering at its fastest pace ever in history. Meanwhile, you have a stock market globally which seems to be defying gravity. It's done nothing here. Over the past 7 months, almost 8, we've had nothing more than a correction with regard to the S&P 500. As a matter of fact, you know this. We're out of bear market territory. We're not even in bear market territory anymore with regard to the S&P 500. And, they got people all worked up and afraid and this, that, and the other thing. It's a crazy situation here. But the easy money is just getting started. The easy money from central banks in an attempt to pump the market, again, is just getting started here. And we can see this, people. We can see this with our own eyes. I want you to watch one thing. You know what it is if you've been following my blog here. It's the 10-year yield. Why? The 10-year yield is the benchmark. That's where everything prices off of. Okay, so keeping your eye on that 10-year yield is going to give you a big clue as to what central banks are actually doing, not what they're saying here. And tomorrow we're going to hear from the Federal Reserve. Oh yeah, 75 basis point hike. That's my best guess what they're going to do. A 75 basis point hike to the federal funds rate, the overnight rate. And let me explain this to you in case you don't know. It's not going to do a damn thing to fix inflation. It's nothing at all. All central banks are doing here is trying to convince the world, and via the propaganda ministry keeps pushing the lie here, that by fuddling around here with the overnight rate, oh, that's really going to slow down inflation. No, central banks are determined to continue to inflate. That's the goal of every central bank, to inflate, to use its product. They have one product and they create debt and they manipulate that to take their fiat currency that they just add digits to a screen and they buy assets. Imagine having that power, but that's what central banks do. So you can expect a lot more of this here. Global inflation, you haven't seen anything yet. With regard to interest rate suppression here, bond yields cratering, you haven't seen anything yet with that either. And all this is a mechanism to strangle the middle class to death in the literal sense. And you all know that. You all know that. So just don't deviate from our plan, which is very simple. Bet against the global debt situation. You do this very simply by holding real assets. Physical gold and physical silver. I don't care what they want to do to this stuff, people. They're going to rig it. JP Morgan has been caught repeatedly. Other banks as well. None more so than JP Morgan rigging the precious metals market via the derivative, and that's what they do. They get fined, they get a little hand slap, but it doesn't stop. That should tell you something. If you have the largest bank on the planet by assets, I'm talking about JP Morgan, they're the largest bank in the world by assets, deliberately suppressing the price of precious metals, that should give you a big clue that that's where you need to be in this environment, because this is going to end like this. Meltdown in the debt market, rates are going to spike in an uncontrolled fashion. We witnessed it already. Central banks got in here to stop it. But that process is massively inflationary, and you're not allowed to know that. So yes, central banks do have unlimited firepower, but at a cost, higher inflation. This is the stuff that you will never, ever hear from the propaganda ministry out of a president's mouth, any president, or out of a Federal Reserve chairman or a Federal Reserve president, or most leading economists who are invariably wrong. It's unbelievable, but that's the way it is in this environment. What else would you expect? But nobody has a better clue than you do. Honestly, if you follow this blog, you know exactly what's going on. You understand why this is all happening here. We're leading up to a climax. That climax is going to be a moment in time where people are going to talk about for thousands of years. An implosion in the debt market, which is going to destroy the stock market. Cash is going to move. It's just going to move in an ocean into commodities. And we're going to see inflation like you have never seen before. Like no one has ever seen before. And that's how it's going to play out at one time. All right, people, look, kind of a long video. I could keep going, but I will see all of you at the end of the day. Please comment here. Think about what I have said in this video blog. Does it make sense to you? People know the truth when they hear it, okay? Has anything I said to you kind of, is it hitting you the wrong way? Or you're going, you know what? This all makes a lot of sense to me. I want to hear from you. Let me know. Please comment. I will read the comments. Share the video as usual, please. I'll see you all at the end of the day, and we're going to sum it up. That's it.